Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for May the 4th, 2010. Now, getting started, our first position tonight is going to be in coffee futures contracts. If everybody remembers, we were trading this one last week and the week before using the triple EMA crossover and a number of other indicators from Vantage Point. I was able to call the breakout on this coffee contract. We've now got that extension higher. Now, we can see we've had some volatility in the futures contracts on the coffee at the beginning of April, but now that's again, it's moved lower, and we've got this breakout that I talked about last week, which has actually happened, which is good. So let's go ahead and identify the major support levels here. Our pivot support, our 18-day predicted moving average comes in at 133.37, 134.28, and 136.38 with a close of 138.40. Now, again, using the triple EMA crossover, we're not using this for a buy and hold mentality. We're using this simply to identify critical levels of support and to further identify the primary trend, which a lot of people fail to do. They'll look at the short term, but they won't look at the bigger picture. So again, the purpose of the triple EMA crossover to start the presentation in any given trade is to first identify pivot areas, and by pivot areas you'll have your better traders will identify, some will use 50-day moving averages, some will use 200, some will use 10-day moving averages to identify a pivot area. With Vantage Point, these predicted moving averages, the ones that I've just talked about here, are excellent for doing just that. So with that said, we've got three other indicators pulled up here that we're going to be using in our positions tonight, specifically the predicted TSI, the predicted MACD, and the predicted RSI from Vantage Point. Now, looking at these coffee contracts, we can see that the predicted true strength indicator has crossed the trigger and is moving higher, but is nowhere near overbought territory. Our predicted MACD has also crossed the trigger, not over the zero line yet, but again, it's sitting nicely for essentially it's setting at trend ready levels, which is like what we like to see. Now, our third indicator, not so cooperative here, the predicted RSI from Vantage Point. Again, it's starting to turn flat on us. It is in somewhat overbought territory, but again, things still look okay there. So once we see that predicted RSI in an area like that, what we can do then is go into our properties with Vantage Point, and let's have a look at the short-term predicted differences and see if we can see if we're getting an overbought or oversold signal. So by looking at this, we can clearly see by putting up strictly the predicted short-term difference from Vantage Point, we do have this into overbought territory. So now what we're going to do is we're going to add the strength indicator to this and to see if it's still moving up. Now we can see that this is a very interesting, hopefully everyone can see this okay. The light line, the light blue line, which is the short-term predicted differences, and the dark blue line is the strength indicator. They have not crossed each other, so everything looks good here for the coffee contracts to continue to move higher. Now, if they started to turn over and cross each other, I wouldn't be quite so confident that this thing is going to continue to move higher. So with that said, we've identified here what's going on. We've got an overbought signal, but we don't have a trigger yet telling us to go short. So we're going to stick with our buy positions. So for tomorrow, we're going to focus on this predicted 3-day moving average from Vantage Point, 136.38. We're then going to go in, use the predicted high and the predicted low for tomorrow to identify where we want to get in and if our predicted 3-day is consistent with everything else. Now, looking at this, we can see here we've got 137.50 as the predicted low tomorrow and 139.11 with a close of 138.40. So we're going to use the 137.50 as our entry point tomorrow, and then we're going to look to have our stops below that 18-day predicted moving average. Very important here that we do that because we want to stay out of that intraday volatility. We've got 133.37, so we would like to, have pace our contracts enough that we can absorb somewhat volatility. And again, this has nothing to do with a buy and hold mentality. What this has to do is playing, positioning yourself in it with a good trade over a slightly broader area to absorb that intraday market volatility. So everything looks good. We're going to stick with those contracts. And again, our first position tomorrow is in those coffee futures contracts. Now, let's jump here. We're going to move over now to the foreign exchange market, specifically the US-Canadian pair. We can see what's happening here. Now, with the US-Canadian pair, we can see that the triple EMA crossover is trying to make its move over. We've got the predicted short medium and long-term crossovers have all taken place. So again, the triple EMA, very important to identify these pivot areas. Our key area 1.0075, 1.0080, and 1.013. Now with that said, we're going to go in, we can identify that 18-day predicted moving average from Vantage Point as a critical level and a pivot area. Again, this has nothing to do with short, medium, long-term trading. It has to do with identifying critical levels using the Vantage Point software. So again, what we're going to do here is we're going to go in now. We've identified those key levels. We want to go into our daily report to identify what's happening here. Now looking at the daily report, we can see here 1.0072. Not likely that that's a coincidence that the Vantage Point predicted low for the day is picking up on that key area and is identifying that. Our neural index is up. We've got a close of 1.0109. Now with using the Vantage Point software, the way I'm suggesting here, we can allow the market to come to us. So when the market approaches this key level of 1.0072, we can enter into our buy positions, and again, we want to have our stops below parity. We want to be using 100, 120 pip stop. Very important to stay out of that broker radar. Now again, we've got our predicted TSI from Vantage Point has crossed to the upside. We're not in overbought territory. Our predicted MACD has also crossed over the trigger, moving higher. The trigger is also getting ready to clear the zero line. That's a positive sign. Predicted RSI, excuse me, not in overbought territory. Everything still looks good, so we're going to stick with that for now. Now our predicted short-term indicator here and our strength indicator have crossed each other, but they're above the zero line, so I think we're okay there. We can see that the volatility using the triple EMA, we've already identified that this thing's going to be somewhat volatile, so we're okay with that. We're going to stick with the buy position. We've identified the critical level, and now we're just going to wait for the market to come back to us. Now that's our second position. We're going to try and squeeze one more position in here. Now what we're going to be looking at here is the New York Light Sweet Crude. We're going to be looking at short positions. Now what I've done here, this predicted short-term difference here, I put onto the chart so everybody can see this. We've moved into overbought territory. The strength indicator from Vantage Point, again, that indicator can only be found on the Vantage Point software. It's crossed over that short-term difference and is starting to move lower. Now our predicted MACD is also crossed over the trigger right here, and it's also extending lower. Our predicted TSI is still showing higher, but again our predicted RSI is starting to move towards that overbought territory. Now looking at these things, we can see again we want to identify those critical levels of support. In this particular case, 84.21, 84.69, and 85.54. Now because of the short-term difference being in overbought territory, along with that strength indicator making that crossover right here, we're going to be using this to get into a contrarian position for tomorrow, specifically a sell on light sweet crude oil. So 86.90 is our high, 85.13 is our low. So the reason why we're going to do this, we've identified the short-term crossover is crossing over that strength indicator. Two of our other indicators are also in agreement with that. But we've got this 85.13. Now this is a contrarian position, so when we approach this 86.90 level, we want to enter the sell position. Then we want to make sure we exit the position near this 85.13. And again, using the triple EMA crossover and the pivot points identified with that triple EMA crossover, we can then know to exit this position, because it's likely this area in this 84.21, between 85.54 and 84.21, this area is likely to hold. So that hopefully that explains why we're using that triple EMA crossover and how to use it with all of these other indicators. So again, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for May the 4th, 2010.